Will the speed of escalating house prices continue going up, or will they fall?
Moving forward with the DekkerTeam. Moving forward together with the DekkerTeam.
We've created for you free access to over 423 episodes of the Life's Inside Track. And you'll get information on real estate, making your house a home. You'll get information on building wealth, creating harmony in your life, and having a life exponential. The great news is it's free and you can access it from the office, from home, or on the go.
And prices? To answer my own question, I love answering my own questions. You ever talk to yourself? Talk to myself all the time.
I've noticed.
It can be confusing for some. But, the good news, when you answer your own question, you usually like the answer, right?
That's me. Yep.
Yeah, right? And so it is going to slow. It has to slow. It cannot stay at these unprecedented, escalating prices. The discussion will become, and we will see as time continues to unravel, because many predicted in 2019 that in 2020 they were going to slow down. And then in 2020, they predicted that in 2021 they were going to slow down. And it hasn't really happened. The slow down has to come. The question is, will they decrease? It's not looking like it. It's looking like we've kind of hit a new plateau, and time, unfortunately, will tell. There are some key factors, though, and that's what we're going to learn in this episode.
Absolutely. And the issue is, no matter where you are, different factors affect your geographic area.
Right.
But we're going to hit some of the key factors, and you can look into these factors. Actually, you can look into the different things and what things might change in the next year or two, and you can actually get fairly good at predicting where the real estate market might go
in a particular given area. So the first factor that is huge, which goes up and down like a yo-yo, and right now, supply is down. Sometimes it's up.
Yeah, it depends on the area again.
Mm-hmm. Yes, there are
depends on where you live and what's going on where you live. Definitely in our market, it's down. It's the lowest level of inventory that I've seen in 31 years that we've been in real estate.
Yeah.
The other thing that's interesting is the number of days that a property sits on the market is also the lowest that we've ever seen. And it's artificially high. Yeah. It's still super low, around 10 days, but it's artificially high because most people are holding offers for 7 days. So that makes houses not sell. If everyone just put them on the market and said, first good offer, I'm taking it, our days on market would probably be like 3 or 4 on average.
Is wild. So demand is the other thing. Demand is what is driving based on the lack of supply. So demand is going to go up or down. So it affects hugely the escalation in prices or the de-escalation in prices. If I've got a glut of houses on the market and I have nobody that wants them, well, prices are coming down. Right now, we're dealing with the opposite effect.
Exactly. And the next item is interest rates. And we all know that interest rates are historically low right now. And you know what? It's pretty stable. The government's saying they're not going to change interest rates because of the unstable economy and everything that's happening and has happened. So that one's pretty predictable right now. But if that jumped for some reason to double or triple, which is still low,
crazy low, like even 4%, even 6% of it tripled is like some of the lowest interest rates we've seen or we see.
Yeah. And I believe that would drive prices down. I think it would.
Like significantly. The good news is we've mentioned before the stress test. As much as many buyers just getting into the market really dislike the stress test, and I get why, because it reduces what you can purchase. And yet the stress test is what is saving a lot of Canadians.
in the future.
In the future. Yeah,
As
it
rates
will
climb.
save them. As rates climb,
They have to climb at some point.
they have to. They can't. We cannot live here forever.
And then the other thing is outside investors. There are a number.
Oh yeah.
There are a number of people
Mhm.
that want to invest from other countries.
Yeah.
They like Canada's stability, and so they're looking at bringing their money here. It's safety. They take it out of the country they're in and put it into a safe country.
And that helps with the escalating prices. The other one that I never thought we would see in the real estate market. 30 years ago, 20 years ago, we really didn't see this in the real estate market. We saw it in the stock market. We saw it in other types of investments. And that is speculation. Speculation purchasing. Speculating that the home you buy now, because it's not going to be built potentially for 24 months, or the condo that you buy isn't going to be ready for another 24 months. The speculation is with a little bit of money down, I don't have to put a lot in, then the house is going to be worth 20%, 30%, 40%, or significantly more than it was when I purchased it. That's speculation buying, because that is purely speculative.
And that really was happening many years ago, like 12, 15 years ago, especially in the condo market. There was a lot of speculative buying.
Mm-hmm.
And actually, we got a glut of condos, and that caused condo prices to dip. And we had way too much supply because those people had no intention of moving into them. And they thought they could either rent them, which the rental market wasn't strong either. And then they sat vacant. And so for several years, the condo market was under pressure in our market. So that's an interesting one. But I'm also finding people are more speculative. They want to buy a house. They want to do a couple renos on it and sell it again in 3 months for a lot more money. So there's demand for even the houses that normally would sit longer that are in poor condition. There's more demand for those.
And so there's more speculative buying. More flipping is happening in this market as well. And then the other thing that affects it is construction costs. How much does it cost to build a house? Right now, it's wild.
Yep. And then jobs. If there's no jobs, if an industry goes out of business and it was a one-town industry, that town can almost become a ghost town.
Yeah.
Because if there's no jobs, if there's job creation, then people flood into the city grows, and then you have an infrastructure issue. They can't build the infrastructure fast enough for the construction companies to build the houses fast enough for the people that are coming in.
Right. So the good news, as far as, our market falling out and people having to walk away from houses again, even with all these variables, it's pretty low. The struggle in 2008 in the States was primarily not a housing issue. It was really a financing issue. And our government has been so good to take care of that because of the stress test.
Yeah, they were giving subprime lending, and they were offering people very, very low interest rates for the first year or 2 years. And then they would balloon up higher than the normal interest rate. And that's when people lost their houses because they couldn't afford the payment.
I know. Icky, right? So the point that we want you to take away, if you take away nothing else, is that it doesn't really matter. Although it may feel like it matters to you, it doesn't really matter whether the prices are going up or they're going down, as long as you're staying with it for the long haul. As long as your aim is to stay in the market will take care of you.
Thanks for the privilege of growing alongside you, because we're passionate about helping families thrive in their life, both at home and in business.
Moving forward with the Decker team. Moving forward together with the Decker